Today, investors will get to know the long-awaited Fed's policy decision. During the New York session, the Federal Reserve will unveil its policy settings. What sentiment is ruling financial markets in the run-up to this crucial decision? Let's find out the viewpoint of our analysts. On a Tuesday, stock investors were on edge, going ahead with the selling shares. The benchmark stock indexes extended the downtrend in the New York session following the gloomy pre-market. The Dow Jones slumped by more than 300 points or 1.01%. The Nasdaq slipped 0.96% and the S&P 500 sank 1.13% intraday to close at 3,855 points. The major indexes traded with a fragile optimism in the green in the pre-market. All of them are set to waver between gains and dips amid the fundamentals. Market sentiment on Wall Street will depend on the Fed's policy update. The S&P 500 is expected to trade in the corridor between 3,740 and 3,980 points. On a Tuesday, all 11 sectors monitored in the S&P went down. The real estate and construction sectors printed the worst losses of 2.6% and 1.9% respectively. The S&P 500 has already tumbled by 19.1% this year. The index has closed below 3,900 points for a third session straight. This level is viewed by analysts as a strong support. The dismal dynamic comes as a result of a gloomy economic forecast presented by Ford. The company incurred steeper losses than expected at $1 billion due to soaring inflation. The company had to delay some deliveries until the fourth quarter because of the shortage in spare parts. Hence, Ford stock plummeted by 12.3% and the sharpest intraday decline since 2011. Today, futures on the US stock indexes are drifting higher because investors are braced for the third aggressive rate hike. According to the FedWatch futures, a rate hike by 75 basis points has been priced in by the market almost in full. Apart from the rate hike, investors will take notice of the Fed's agenda for the pace of further rate hikes aiming to tame soaring inflation. The stocks of US high-tech giants such as Apple, Tesla, Microsoft, Amazon and Meta traded mixed in the pre-market, but they rose in the early trading hours. Stocks of US defense companies such as Raytheon Technologies, Lockheed Martin and Northrop Grumman jumped in the pre-market after President of Russian Federation announced Russia's first mobilization after World War II. The recovery in the stock indexes is propped up today by growth in the quotes of large energy companies. Wall Street could maintain its optimism if the Fed raises interest rates in line with the expectations, or if investors find out some hope for a completion in a cycle of aggressive tightening in the near future. However, if the regulator confirms its hawkish rhetoric, the stock market will take another nosedive. Meanwhile, the US dollar has conquered a new peak in 2 decades. Its index climbed to 110.80 and retreated later on. The outlook for the greenback is firmly bullish. Its intraday corridor is between 109.80 and 111.20. The US dollar owes its strength to expectations of another sharp rate hike and mounting global uncertainty. Today, Russia's President Vladimir Putin ordered mobilization in Russia and resorted to nuclear blackmail. Financial markets view his comments as a warning that Moscow would respond with the might of its Western nuclear arsenal. As a result, the euro fell to 0.9895 against the US dollar, having lost 0.87% in the early American trade. And the euro has gained ground afterwards. The US dollar has settled at 110.80, the strongest level since 2022. It dipped in anticipation of the Fed's policy settings and a quarterly forecast. The regulator has tried hard to push down the US dollar as a safe haven asset. The firm greenback is again setting the tone for the USD CAD pair. Nevertheless, the loonie is more resilient than other currencies, thanks to growing oil prices and the hawkish Bank of Canada. At the time of recording this video, the pair was trading at 1.3369, 0.12% up from yesterday, and the intraday Canada for the instrument is defined between 1.3300 and 1.3410. Canada's fresh CPI showed a decline in the consumer prices, though inflation remains at elevated levels. The Bank of Canada admits that the battle with the high inflation could be won, sacrificing economic growth. Hence, they do not rule out a recession. As for the energy market, oil and the gas prices spiked to 2.4% in light of the remarks by Vladimir Putin. Indeed, traders are braced for another blow to global energy supplies. The industry data showed that U.S. oil inventories expanded by almost 1 million barrels last week. Besides, gasoline and distillate inventories grew by 3.2 million and 1.5 million barrels respectively. Brent crude regained 2.04% to trade at $92.47 a barrel, and WTI futures rose 2.48% to trade at $68.00 a barrel. The crypto market is displaying some signs of optimism in parallel with the S&P 500 and the Nasdaq. Crypto assets are trying to recoup losses after a few dismal sessions. Bitcoin has risen 1.5% to trade at the level slightly above $19,200. Altcoins such as Ripple, Solana, and Litecoin are trading mixed today. Ethereum is trading higher in sync with Bitcoin, albeit at a slower pace. The prospects for the crypto market are the same as for other risky assets. If the US Fed increases the funds rate by a percentage point, investors will dampen their risk-on mood, so risky assets will plump the depths of the bear market. Alternatively, if the regulator's decision meets market expectations, crypto assets could extend their recovery. Tomorrow, we will certainly analyze the market response to the Fed's policy update. Trade prudently with the InstaForex, and see you tomorrow.